Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly and welcome everybody once again for another amazing video of DIY investing. For today's video, I wanted to take a look at the big picture trends of Bitcoin so that I can give you guys the most accurate observation into understanding what is actually going to be taking place inside of this market cycle. You guys already know that we've been talking about a couple different factors between lengthening cycles as well as the 4-year cycle. And today I wanted to talk about some of these factors, but really analyzing what is taking place over the course of the last couple of years and what I think it means when it comes to creating a long-term bottom inside of this cycle. There's a lot of really cool charts that I'm going to share with you guys that I know is going to provide a ton of value, so make sure you stay all the way to the end so that you don't miss out on any of this exciting information. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server or download my free ebook. Links are going to be provided for you in the description for both of those. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, now the first things right off the bat, we're going to be taking a look at what I feel is the most important chart to cover. We're not going to spend a lot of time here. We're going to dive into the bigger pictures, market cycle stuff, but what we've all been waiting for, what I've been updating you guys with continuously, is the dollar index. When are we going to be rejecting from this resistance? I saw a lot of people that were starting to get really bearish on crypto the second that we started rallying up to this resistance. And of course, this went higher than I was anticipating. But at the end of the day, even with us kind of breaking short term above this all-time high, or I should say just the high here at about 104, even though we were breaking a little bit above that, the type of move that we saw with crypto to the downside right onto a major support level, I figured that that is either going to be where we either see a massive rejection in the dollar at this resistance, once again for the third time over the last 6 years, or the dollar is going to be breaking out and then Bitcoin is just going to crash. But I mean, inside of a Bitcoin cycle, there has never been a time where Bitcoin breaks an all-time high and then retests the previous all-time high. That's just never happened. And so I didn't expect that this cycle was going to be the first one to have that happen. Now, the dollar has proven over the last 6 years that every time we hit this resistance, we fell lower, right? And that happened, even just a couple years ago, March of 2020, when that COVID sell-off happened. We actually saw the dollar rally up, tag this resistance, and then that was once again where we topped. And so for me, I felt like the most obvious trade to take would be the one where we reject off of this for a third time once again. And it was kind of interesting to me how once we actually started the dollar rallying up super hard back to this resistance, which historically we've topped from, we saw a lot of people starting to get really bullish on the dollar and bearish on Bitcoin. And a lot of people said that, the Fed meeting was going to be really bearish for Bitcoin, the dollar was going to break out. And thus far, we've only ever seen this materialize to the downside. So we have 8 days left until this candle closes. We got to wait until that close to get definitive results one way or another. But the way that this is looking, it looks to me like a rejection just waiting to form. We'll see in about a week. But I mean, if Bitcoin starts rising over this next week and bouncing along with the rest of the markets, which it looks like we could easily be in store for, then it's just going to look like this is going to go lower from here. So if this goes lower, if we get a nasty rejection close on the monthly, then I just don't see a scenario where Bitcoin and other cryptos and even other markets like stocks, commodities, and things of that nature, those are also going to be building in bottoms. And it could be a slow process. I'm going to get into that here and now. And let's talk about what we could potentially see inside of our bottom. And I feel like these are going to be my other most important charts to share with you guys, because it's really a couple cycles we can look to that have created this exact same sort of consolidation pattern. And it's both happening kind of at the same time frame, not so much the same time frame, but it's happening in sort of the same sort of fashion, right? Now, when it comes to the time frames, we're also going to get into that at the later point of this video. So if you guys want to learn more about the time frames, how that is factors in with what we're seeing today, I will get into that as well. But the thing I want to share with you guys is a prior cycle that has followed the same consolidation, that not only followed the same consolidation, but it's happening inside of the same Elliott wave structure. So you guys know I really like to map out big picture Elliott waves because I feel like they're a lot more accurate on a larger degree of trend. And that's kind of one of the big reasons why I've continued to hold throughout all of this consolidation, and why I've continued to actually add to my positions and buy more, rather than, you know, looking to hold and wait until more of a cycle low of a bear market. Because when I look at this chart, guys, we never really saw a true cycle top, in my opinion. And you can draw the conclusion that this was our wave 5 that topped at 69K. I do 100% understand the bearish thesis that, you know, we all can see there. But at the end of the day, I don't think that that is necessarily the primary account still. And I'm going to explain to you guys why. We can look at one other cycle that has done this, and I've explained this over the last couple weeks. And, you know, we've really been talking about this pattern since all the way up here. When Bitcoin first started to sell off up here, and especially when we got this rejection and this massive sell-off right there in this candle, that was when we talked about the bearish alternative, where we ended up actually falling and crashing below support. And I shared with you guys this chart as our example of a prior cycle that's actually done that. And it didn't really go much below our support, but that was the thing, is you can keep in mind that all of the stock traders back in the day, you know, this is a big picture cycle. I mean, the stocks over here bottomed in 2002, right? So we bottomed in 2002, rallied for 6 years, topped in 2007, 2008, and then we sold off and bottomed, you know, in 2009 right here. And so you can imagine that everybody that was trading at the time of this crash was thinking to themselves, oh man, I'm just going to set a giant margin long position. I'm going to go 100x long right here at this all-time low support at the bottom of this wick from 2002. And you can think that that's what everybody at the time was thinking. Oh, I'm just going to long support. It'll never go below support. That's a major support that we've been above since, you know, 2002, 10 years basically. And then sure enough, here's what happens. The market makes this massive stop run. It goes right below support, stops everybody out, liquidates all of the people that were over leveraged as support, and then proceeds to go straight to new all-time highs on a massive, you know, 10, 12-year bull run that we've been in ever since, right? And so that's kind of the big thing that we've been watching inside of Bitcoin. And I pointed this out for a while, and at this point, this truly is the only bullish count that I could see with Bitcoin. But when inside of the Bitcoin chart, when I've been watching this, we never got this move inside of our Bitcoin cycle. We never got our wave 5, right? So if we look at what happened here inside of the SPX, inside of our wave 3, we topped right at the beginning of 2000, and then we made our second top, and this was actually a break of the previous all-time high. Same thing that Bitcoin did at 69K, and then it sold off, and we ended up selling right below that support. But then we immediately rallied back up, and we've been inside of our wave 5 ever since. And that's the same market structure based off of an Elliott wave cycle that Bitcoin's at today. If we look at the big picture cycle based off of our Elliott waves for Bitcoin, our one wave was the bottom of the bear market from 3,200, run up to 14K, and then the end of our wave 1 and the beginning of our, or I should say the end of our wave 2 and the beginning of our wave 3 was our COVID capitulation back here to about $3,800, right? That was the end of our wave 2, beginning of wave 3. Wave 3 takes us from 3,800 all the way to 65K. We get that correction here. And originally, I was thinking that that was our 4-wave correction. But we went through a much more extended period of consolidation than I was initially expecting, but still, we never got our wave 5, right? What we were all waiting for was our wave 5 here. Now, I have seen people draw the conclusion that we already did our wave 5, and that was our wave 5 at 69K. But to be honest, guys, I just don't really actually think that that's the case. I don't think that this was an impulsive structure. I think that this was a corrective structure, and it wasn't done. Our correction wasn't done because we ended up getting a sweep of the lows here. And so I still believe that we're going to get our wave 5. We're still missing this move here in our big picture of Bitcoin, right? And I believe that that's what's ultimately going to materialize. Where we're at right here is right here. The same position at the very end of that 2008-2009 crash. At the very beginning of 2009, when we started the bottom, build somewhat of a capitulation base, that was the bottom in our beginning of our wave 5. And so what we can see here is pretty much the same thing. And so when we look at Bitcoin on the bigger picture, I think it's really important to understand a couple different factors. Factor number 1, the dollar is rejecting from our major multi-year resistance. And this is all happening after record inflation numbers, higher inflation than anybody's anticipating. There's all kinds of bearish things to basically, I mean, when I think about the economy at face value, record inflation, you know, the economy's really weak and struggling. There's less jobs, less people able to earn money. Things got way expensive. Commodities are rocketing up in value. Cost of living and everything is going up, while they've also printed so many dollars that the value of our dollar and the spending power that we have by holding dollars is going down. These aren't reasons to be bullish on the dollar. These aren't reasons for the dollar to break out of a multi-year high, right? This, to me, seems like a valid thesis for why we would see a rejection at these levels. So, with that being said, with the idea and the thesis that we would see a rejection at these levels, what happens when the dollar rejects? Well, Bitcoin rallies, stocks rally, commodities rally, and where we're at right now is resistance. So we should expect to see this being the long-term bottom across the board on all of those markets. So if that's the case, the stock market should be stitching in a low, if not already. We do see bullish divergence. Keep in mind, markets can stay overbought or oversold for extended periods of time. What I can say is the bullish divergence on the OBV we were watching can technically still materialize if we don't go below our little tiny wick below that move. If we don't make a lower low below the move to 3,800, then at that point I would expect that this is going to materialize because we have some bullish divergence here on the RSI. We have it technically still on the OBV, although more weak of a signal, I should say. But nonetheless, guys, if the dollar tops, this is going to be a long-term bottom in the SPX. If it's the long-term bottom in the SPX, it's a long-term bottom in Bitcoin. If it's a long-term top in the dollar, then of course the commodities like gold, silver, oil, all those things are going to keep going up kind of like they already have. Now, this is another chart that I want to talk to you guys about because it's going to give you guys something else to consider here in the big picture of where are we inside the cycles. And I'm going to give you guys my points on where I think that we are because I have heard the idea of a super cycle. We've briefly talked about it in maybe 1 or 2 videos on this channel. But I wanted to give you guys this kind of chart because it shows that we constantly have the same money accumulating and the cycles follow a very similar trajectory over time. Now, oftentimes we're going to see variances, we're going to see changes, cycles are going to get longer, in some periods they're going to be shorter. That's just the way that they kind of work. Now, the reason why we're talking about this is because I thought it was a really interesting comparison. And this is actually a chart that we spent a lot of time comparing back in 2020 and then at the early stages of 2021, right before Bitcoin made that big move to 65,000. We used to talk a lot about this comparison over here because it looked so similar to what we were seeing at the time of the prior cycle, the cycle that we're in currently today. Now, the one on the top, this was from 2018 all the way through to current today, right? This is 2022 over here. Now, this one on the bottom was actually our total market cap from 2013 all the way over to our peak at 2018, right? And then that's where it syncs up with this top chart. Now, what I thought is super interesting, and this is something we'd been following for a while, we knew how all of these cycles were correlated, right? We used to spend a lot of time talking about these fractals way back at the early point in 2020. Especially when we got this COVID capitulation right here, I was telling you guys about why we shouldn't necessarily worry so much and why it's actually a good opportunity to buy, because even though it's more volatile, it's very similar to what we saw over here in this big move right here. Now, we'll follow the steps. I'll go through and explain it to you guys, but it's the same sort of, well, most likely it's the same money accumulating, but it's also the same emotions in each and every cycle. It's the same sort of things that happen every time. Now, this is both created through the same money that buys the dips and sells the tops, and it's also created by the same retail investors that FOMO buy and drive the prices up, or panic sell and drive the prices down, right? And so what's interesting here is we saw the same fractal in 2013 as well as in our current bear market over the last, 4-year cycle. Now, what was interesting is it really started to sync up here at our capitulation. We make the same sort of capitulation where we make this chop and then our bottom. And then this big ABC bounce all the way back up pretty close to those previous resistance levels here. It's the same thing that we did in our most recent bear market. The same bounce back up into resistance. And then we even made the same sort of sell-off back down. We rally back down, I should say we sell off back down pretty close to our all-time lows. We held support a little bit above a high, and this was our first higher high. And so we were all watching during this breakout here, right at the beginning of 2020. We were all watching as this was going to be our major bottom. And then, of course, we got our final capitulation, COVID happened. That was even intensified as we went all the way back down to basically retest our all-time lows. And so it became more volatile in our most recent bear market than it was all the way back in 2013, but it still followed the same pattern here. This is the same sort of trajectory that we saw. It was almost the same time frames even. With this bear market, our most recent one, spending more time inside of our consolidation than the last one in 2013. And so what was interesting here is once the Bitcoin actually rallied up, once it really took off, and keep in mind that this chart right here is actually the total altcoin market cap chart. But when we saw the whole market take off and Bitcoin went to 65,000, and then we got our first major top. ETH topped at 4,500, Bitcoin topped at 65,000, right? We went through this extended consolidation, and this is actually where I stopped paying attention to this exact fractal. But what I think is extremely amazing here is the fact that even though I stopped paying attention to it, it never stopped actually following the fractal. And that's why I want to talk to you guys about this today, because it does show that we are in an interesting time period with the market structure itself. And I think it's just something to consider. I'm not really trying to point to conclusions and say that this is guaranteed to happen or that this isn't going to happen, because I truly don't know. But what I think is interesting is just the fact that we're not only have followed the same consolidation, but we're still following the same consolidation for the most part. Now, this is where we're going to actually make the comparison towards more of Ethereum, because this chart, both the top and bottom, is the total altcoin market cap. It's just excluding Bitcoin. Bitcoin's not even factored in either of these charts. And so when I was referencing to Bitcoin, I was just trying to give you guys more of like something to base your perspective on, so to speak. Now, this the chart down here at the bottom, this was when Ethereum got added to exchanges and made its first run to $23. This was the run to $23, and then when it topped at $23, it made this consolidation before falling to $6, bottoming at $6, and then that was the move that it went all the way up to its massive run, 450, and then ultimately to 1450 up here. Now, what I think is interesting is the fact that our cycle today is still following those same sort of fractals. It still looks very similar. Now, keep in mind, we have way more money. It's happening on a much greater time frame than it used to in the last cycle, which if you're a follower of the lengthening cycle theory, then that would make sense, because theoretically, we would expect to see more of an extended period of time between the last cycle, right? Because this was back when, altcoin market cap was probably worth like just a few $1 billion total. And this is at a time where, altcoins are worth hundreds of billions of dollars total, right? So we are at a major difference as far as that goes. But if we see here, it's still following a really, really correlated degree of trend. Now, this was when Ethereum first broke out. We made the top of our 3-wave. This was pretty much our move to all-time highs. And then when Ethereum made the top of its 5-wave, this was the move past all-time highs and really the breakout of those all-time highs, right? And this entire consolidation that we went in over that year was pretty much just us consolidating, retesting those previous all-time highs as support, and then breaking out and going into price discovery. Now, what's interesting is that's literally the same point that we're at today. There's no difference here for the most part. The only difference is we were arguably more bullish because we broke out of those all-time highs quicker. Now, this is where we get a little bit of a contrast here. Our 5-wave, if you count this a 5-wave inside of our current cycle, it barely even went above our previous all-time highs of our big move in early summer of 2020, right? And that's where we see a big difference in the two cycles. But nonetheless, both of these are at the breakout of the all-time highs. Both of these are still retesting previous all-time highs, and we've never once closed back below the previous all-time highs for Ethereum. We've stayed and maintained support above them for the better part of over a year. And so what's interesting is that we're still following a very, very similar consolidation here. Now, obviously, this is going to point to the conclusion that this is what we're going to see coming for the total altcoin market cap, which is pretty on par with what I've been saying. The only difference here is the fact that this move, if we're following what happened in our 2015 cycle, 2016, 2017, all of that early time frame, this was only our wave 1, this was our wave 3, 4, and then that was our wave 5. I don't think that that's the same point that we're at in this cycle. This was our wave 1, 2, This was our wave 3 and 4, and I simply think that we're just missing a 5 wave. So what this chart shows is that we're missing a wave 3 and 5. I don't think that we're that far in this cycle as far as being so early. We definitely could be. I mean, you never know where, as far as like, there's been a kind of an idea in my head that maybe we're in a correlated lengthening cycle between the 4-year cycle and the lengthening cycle, where this current consolidation that we're in, even though we never saw a major blow off top, and even though the sell-off hasn't been quite as severe as a normal bear market, maybe it's never going to be, you know, quite like a cycle that we've seen. What if it still is a 4-year cycle inside of this consolidation, and the move that comes is still ultimately a major wave 5 or something, but it's going to be this type of a move after that? I don't really know 100% what it's going to ultimately play out, but what I can say is it's really cool to see how we've not only correlated over the course of the last 4 or 5 years of this chart, but we're still doing the same thing today. Now, who knows? Maybe it creates this type of a move to the upside. At the very least, I do believe that we're going to get a final blow off top. That would be our final 5 wave. If we go to a logarithmic chart, I just simply think that we're missing our wave 5, right? Wave 1, 2, 3, 4, and then we're missing a wave 5. That's where I think we're at in the big picture cycle. You know, I do understand the idea of the super cycle, but, you know, at the end of the day, I simply am just waiting for this wave 5. That's kind of what the charts are telling me anyways. But I wanted to give you guys these updates as a way to kind of show you what's happening. At least it does look like we could be in store for a short-term bottom. As we get closer towards the bottom of this cycle, what I did want to talk to you guys a little bit more is about what it could look like. Now, what the only true thing that we have to look at is what the SPX did, and we did go through a pretty extended period of consolidation. Now, this is where I briefly mentioned that what if we're in actually like a combination of a lengthening cycle and 4-year cycle, and what if this is our bottom and we spend the better part of the rest of this year kind of chopping around and doing stuff like this before that is our bottom? You know, we could make something more like what we saw back here in 2015. I'm not trying to say that we're going to see exactly this type of a move, but I mean, if we do follow a 4-year cycle, we still have 6 months left until the end and the bottom of our projected cycle bottom. And so if that's going to be the case, you know, I wouldn't be surprised if we saw something along the lines of this, something like we saw in that early cycle. Or, you know, maybe it holds support a little bit higher and we go through a little bit more of a consolidation. We could spend a lot of time here chopping around, spending a lot of time, you know, faking out before we ever find a true bottom in this cycle. So the big thing that I'm going to be watching for is simply going to be, you know, what the dollar is going to do, because that's going to pave the way. Since we're ejecting, you know, I think bottoms in across the board, at least the short-term bottom. So that's what I'm going to be watching for. Keep you guys updated from here. Thank you guys so much for tuning in. If you found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. Join the Discord server, download my free ebook, or you guys can actually sign up for my VIP. Follow the trades that I take, all the NFT signals, all the fun stuff. Links are in the description for all of that. Thank you guys so much for the support. And with that being said, I will catch you in the next one. As always, peace out.